Okay, good evening, ladies and gentlemen. My name is Erika de la Garza, and I'm the Program Director of the Baker Institute's Latin America Initiative. It is my pleasure to welcome you to this evening's important and timely discussion on the politics of foreign investment in Latin America, particularly as we look at Venezuela and Argentina. Since its inauguration in 2008, the Vecinos Lecture Series has addressed some of the most important issues confronting Latin America, and tonight is no different. Venezuela and Argentina have both continued to drive most of the news coverage about Latin America, and in large part because of the many controversial political and economic decisions both of the governments have made. Yet, despite this government's nationalistic, often static discourse, both countries continue to lure foreign investment. So why are the governments of Venezuela and Argentina interested in attracting foreign investment? When do they protect investors' property rights, and when do they expropriate or otherwise attack investors? Which factors are key to understanding political risks for investors in these countries and in Latin America more generally? Tonight, we are honored to have with us a distinguished group of experts who will address these and other questions as they pertain to Venezuela and Argentina. And our hope is that they will shed some light of what we can expect from both countries in the near to medium term. We don't have time to detail the many accomplishments of our three panelists, but instead I invite you to look at their impressive biographies in your programs. One thing is certain, they are all acknowledged experts with a wealth of experience and information on this topic. Daniel Kerner is the practice head of the Latin America Eurasia Group. Francisco Monaldi is a non-resident fellow of the Latin America Initiative, as well as a visiting professor at Harvard's Kennedy School of Government. And Ali Moshiri is the president of Chevron Africa and Latin America Exploration and Production Company. We are very grateful that they've taken time out of their very busy schedules to be with us tonight. I also want to thank Mark Jones, chair of Rice University's Political Science Department and also a fellow at the Baker Institute, who will moderate the question and answer session after our speakers' presentations. So ladies and gentlemen, please help me join me in welcoming our guests.
Well, thank you, Erica, and I just want to briefly say also thank you to our three panelists. Clearly, Argentina and Venezuela are among the most important countries in Latin America. They're two countries with tremendous potential that hasn't actually been realized today, in part due to issues related to government. I myself have focused mostly on Argentina since about 1990. It's a country that I believe has tremendous promise, and I'm very bullish on the future of the country. I'll be interested to hear what the panelists have to say, but I think starting around, particularly on December 10th of 2015, things are going to get much better in Argentina, although perhaps we're going to have a bumpy road between now and then. So today the format will be each presenter in alphabetical order across. We'll speak for approximately 15 minutes. Then we'll have a time for questions and answers, and then with a short time period for closing remarks by the three panelists. So without further ado, Daniel Kerner, the floor is yours.
Thank you. Okay, well, thank you, and thank you very much for the invitation, Erika, and to the Institute. And so my idea is to talk a little bit about the situation in Argentina in general, but more specifically related to energy policy and the energy sector and what has happened to oil production and the problems that have affected Argentina, and a little bit about what the outlook for energy policy is in Argentina. I think Argentina is particularly interesting in many ways because it really shows, some of the problems and pitfalls of the kinds of policies that have been applied, but also because Argentina, that used to be a country where energy was not particularly important or was not really a country that was particularly important for people watching the energy sector, now with a huge potential in unconventional resources, has become really one of the main objects of focus of specialists in the energy sector and, of course, of companies. And so essentially, the story of, say, in Argentina is really, I think, a perfect example of how much I would say of the importance of providing right incentives, institutional strength, and the rules of the game, and how much that affects investment and production in the oil sector. It really, I think, it's a story of a lost decade in the energy sector, right? I mean, in macroeconomic terms, it's been a story of high growth, although probably much less than what the government has said it is, at least until 2012, and since then, really not that much of a positive story. But the government that's obsessed with narrative and discourse and creating slogans, right, has called the Kirchner era from between 2003 as the década ganada, or as the people in the embassy in Washington call the one decade, reflecting how good their English is. But in any way, I think if you really think about it in the energy sector, it really has been, I think, a lost decade and a story of failure. What you saw is a product of significant underinvestment since 2003 that led to the decline in oil and natural gas production and natural gas reserves. And really that has been a function of the government's policies. A government that came early on as a product of a very substantial crisis in 2001 and 2002, and was very reluctant to allow energy prices to increase, trying to maximize growth. And yes, there was a very significant, obviously, populist content to this, but I think it was also a government that had a very strong sense of weakness because it came from a crisis. A government that believed that it was not going to survive more than a year, when a lot of people thought that the Argentine economy would never recover and certainly would never grow. And so it was really a government that was very, very fearful of doing anything that would imply paying political cost. And so essentially kept prices frozen. Prices, they have been rising in different ways since then, but they're still very low from international standards. And it's also a government that, in part because of this fear, also became heavily interventionist against the private sector across the board, but especially in the energy sector. And that, I think, explains a lot of the decline in hydrocarbons production. And the most important thing is that I think this is really in stark contrast with what happened in the 1990s. If you look at the graphs, really the 1990s, even in a context where the economy was in recession, when international oil prices were much lower, was really a story in which production and reserves kept rising. Yes, certainly there are some geological issues there, and in terms of the maturity of the fields, etc., that some people certainly here can talk more about than I can, but I think it really is a proof that in the 1990s, where there was a very stable framework, where the rules of the game were very clear, companies actually started to invest in production, and reserves went up. And to some extent, this started to create a lot of problems in the economy. But, for the first few years, both in the energy sector as in the macroeconomy, the government was really able to live from the results of the 1990s. Obviously a government that came out of a deep recession, there was ample spare capacity, there were still reserves, there was still production, and so this really was not a problem. Even though some people were highlighting that this could generate a problem, up until 2007, it was really just an issue of specialists highlighting what the problem was. But starting in 2007, this really started to become a major problem because essentially there were shortages, right? The Argentine energy sector is really built around natural gas, and there was insufficient natural gas production. I would say maybe in 2005 the problem started. 2006 the government decided to stop sending natural gas to Chile, but that was not the problem. That was a problem of the Chileans that are still struggling with that. But it really was in 2007 when it started having a problem in the economy. And the government's response when it started having real problems and facing real shortages that were affecting even the manufacturing base in the industrial sector was essentially to increase state intervention in two ways. The first one was to throw money at it. In very inefficient way, it started subsidizing the imports of alternative fuels, right? So even though the domestic price for natural gas was around between $1 and $2 per million BTU, the government started importing natural gas from Bolivia paying $5 and up to $7, or importing LNG paying more than $15 per million BTU. But the real objective here from the government was actually not to pay any cost by increasing either the cost on the industrial sector or most importantly on residential consumers. And the second response was to start to micromanage supply and demand. So essentially telling this company that they could consume this amount of gas one day and maybe another amount a different day. But the important thing was to shield residential consumers because of this original fear that any price increase would then lead to social unrest and potentially to political problems from the government. But the government also, realizing that this didn't work, started to launch some incentive programs that were very arbitrary and managed by the government. And I think the interesting thing is that instead of doing what any normal government would have done, which was starting to liberalize the prices, most of the changes in prices and incentives were very strongly managed by the government in a very centralized way. And I think what this really reflected, other than the fear of paying political costs, was a very deep mistrust in the market and a very deep mistrust in the private sector, which in many ways also goes back to the fact that this is a government that comes out of a very big crisis. With a sense that the private sector essentially cannot be trusted. That if they actually were to be given more money, they would use it to take it out of the country or to finance some other things, but would not invest. In what I think it's a very wrong read of how the private sector worked. But this strong mistrust of the market, which has a very long history in Argentina and as in many other parts of the region, really I think has shaped a lot of the government's policies in this regard. And of course, there were some individuals making very nice businesses, and getting some benefits out of this as well. But I think this really reflected something much more fundamental. But the problem is that really started to create significant problems for the economy. An economy that had, up until I would say 2007, really, in spite of all the problems, maintained the pillars of fiscal stability and external stability, started to lose them after 2007. What started to happen is, mostly because of the problems in the energy sector, the energy imports started to rise substantially. Argentina has gone from being a net exporter of energy of around $5 billion net exporter in 2005 to a net importer of energy this year, maybe importing, with a deficit of around $10 billion. And it also started having a significant impact on the fiscal accounts. And as you can see, the fiscal deficit also started to increase. The government's response, of course, was to try to see which buckets of liquidity it could target. And so it looked at the agricultural sector, it took over the central bank, it nationalized the pension funds, and then it just started printing money. And that, in many ways, has led to the mess that we're on, where Argentina is in a deep recession with the economy that may contract between 3 and 4% this year, and potentially something like that next year, with inflation above 40%, with a trade surplus that's only maintained by very strict import controls. If you looked at the numbers, imports declined by 20% in August, certainly reinforcing the recession, and now it's also in default. So essentially, really was the decisions on the policy sector, on the energy sector, that created a lot of the mess that we're in. As the government started to see also that the situation was not working, and also incentivized by the discoveries of unconventional resources in the Vaca Muerta play, then they decided to take over the largest energy company, and so nationalized or expropriated, half of YPF, the largest energy company, from Repsol, and then even moved to changed the framework towards a very interventionist framework in Argentina with the so-called Decree 1277, which essentially moved Argentina from a concessions-based model into one that was fully interventionist and state-planned. Of course, it was state-planned, the ideas were good, but it didn't work. The nationalization of YPF clearly didn't work. The government believed, well, it doesn't matter, yes, the prices are low, we've taken over a company, we've changed the rules of the game, but the resources are here and companies will come for sure. But, not surprisingly, companies did not go to Argentina. Well, maybe a few did, but for the most part, they haven't gone. And so essentially what really happened is that the results continued to be disappointing, and that continued to generate a lot of pressure on the macroeconomic accounts. And this really started to shift policy slightly last year. What we've seen in the macroeconomics arena a little bit, although less now, but certainly in energy, is a very gradual and I would say reluctant move towards more pragmatism, driven mostly by YPF. Because that was, I think, the biggest change that occurred in the energy sector in Argentina in the past decade, is that Argentina went from having no state-owned company, and many people would argue that it was strange that that's a country that has no state-owned company, that they were able to actually privatize it in the 1990s, but now that has a state-owned player that has substantial influence, and it's headed by someone that comes from the industry and that understands more or less, or very well actually, what is needed in order to attract investment. So essentially, what started to happen is YPF started to drive policy in a way that was mostly beneficial for YPF. Increasing gasoline prices and increasing subsidies in order to fund YPF so that YPF could do a bit more exploration, but also starting to create better and more attractive terms for private companies that allowed the government to sign deals with a couple of companies on terms that are secret, but maybe we can gain a little bit more knowledge later today as to what those terms are. And but that, everything indicates are actually very favorable terms. But the fact of the matter is, because these have been very ad hoc moves in a context where you still have a government that's very interventionist, where the rules of the game continues to shift, and where the macroeconomic picture is very challenging, the results have been, for the most part, disappointing. There has been investment for sure, especially in Vaca Muerta. The results are, well, depends on who you ask, are good or bad. But certainly what we've seen is that production has continued to decline, and imports have continued to rise. And in a context where you have where a government is on its way out, where the recent default and the abandonment of an agenda that the government had to try to fix relations with foreign investors in order to stabilize macroeconomic accounts have been thrown out the window by the recent default, and where the macroeconomic problems continue to worsen, government policy is also going to continue to worsen. Maybe not so much in the energy sector, but certainly in other sectors. We're probably going to see more pressures on the banks, we're probably going to see more pressures on the agricultural sector, and that's probably going to keep a lot of the investment depressed, and not much will happen in Argentina before the end of the president's term in December 2015. So the question then is, well, what will happen after 2015? Should we be as bullish and positive as Mark here? And my sense here is that, yes, I think, if you look at all the potential successors, they seem to be better than the current president. True, two of them have been have been main players in this government. True, two of them have defended most of the policies in this government. But at least now they seem to believe that those policies were wrong and that new policies should be right. I think there is a recognition that the only way to stabilize Argentina is by attracting foreign investment. Part of the problem, I think, is that the belief in a lot of politicians is that essentially means going back to a cycle of issuing debt in order to minimize making a domestic adjustment. So in that sense, the improvement may be there, but I think maybe less positive than what some people are still expecting, and what most people actually, even in Argentina, are expecting. But certainly I think any new government will have to be more market friendly, because the current set of policies is unsustainable. I think more intervention, more restrictions will just generate more social unrest. I mean, the new government will take over an economy that has been in recession, but would have been in recession for 2.5 years, with inflation above 40%, with almost no central bank reserves, and with a large fiscal deficit. I think that is particularly positive for the energy sector, because that's for a couple of reasons. I would say the first one is because every politician in Argentina knows that it's the energy sector that is the root cause of most of the problems that Argentina has. And so any politician that wants to have a stable government will have to attract investment into the energy sector. There's no way around it. And the only way to do it is to open up towards private and foreign investment. And second, and I think more worryingly, a lot of politicians are now overly enthusiastic about what actually be done. The president recently said that everyone's talking about Argentina as being the new Saudi Arabia, and a lot of people made fun of her. But if you talk to politicians, that's essentially what they think. This is going to be our new soybean, right? We're going to be wealthy again, and we won't have to make a fiscal adjustment. We won't have to make an external adjustment. We'll just have the money pour in, and we're going to be in great shape. But I think there's a good chance that they'll be disappointed. I would say that in general, if you look at the structural conditions of Argentina in the energy sector, I think, and the unconventional sector compared to other countries, I think, there's positive conditions, right? I mean, there's low environmental opposition, the infrastructure's there, the market there. They say that the reserves are there. We'll have to see how good the reserves are. The costs are probably going to be high, but I think there's a good chance that we start to see some investment flowing out of Argentina. But I think the other important area where this development may be, I would say, shaped in a direction that is far from ideal is that most of it, I think, is going to be driven by YPF. As I said, I think the fundamental change that we've had in Argentina is that now there's another state-owned company. And most politicians want to maximize the role of the state-owned company. And what we're seeing now with a new hydrocarbons law that's been discussed in Congress is that what YPF wants and what most politicians want is to set up a condition for YPF to own most of the resources and use it to open the sector in ways that actually benefit YPF, mostly by signing bilateral deals with companies, which could or could not be I would say successful depending on the terms that we offer. But I think even if it is successful because the terms are positive, I think it essentially means that Argentina is not going to go back to a framework of stability, of clarity in the rules of the game, a framework that I think was successful in the 1990s, a framework that certainly has been behind the success of the unconventional development in the US, but more to an environment probably closer to Russia or Venezuela, where it's really the state-owned company that defines what to do and the politicians that define what to do. And sometimes it works well, but then after time, maybe it stops working well, which essentially also will create the problem of, potentially another cycle of booming investment and then another bust as the rules of the game change. And I would say, just to conclude, that there's another issue I think that's going to be particularly interesting for the Argentine case, and and I'll be happy to hear what other people have to hear about this. But when we think about look at Latin America in general and think about the development of the energy sector, what we're seeing is that energy policies over the past decade, for the most part, have not been particularly favored to private investors because of high growth, because of the cheap, and easy availability of finance. Politicians in most countries, except Mexico in the region, have really become very emboldened about their ability to extract tougher terms from private investors. Brazil clearly being, I think, the main case of this. But in a context where growth is going down, where the external environment is less favorable, where there's huge demands from the population, what politicians are starting to do is realizing that they need to start to attract investments into the energy sector. So I think the trend that we're starting to see for countries, probably not Venezuela, is an opening of the energy sector in most countries. We're likely going to see it in Argentina. We're probably going to see it in Brazil. We may see a deepening of that in Colombia. We're seeing a big opening in Mexico. And I think that's another thing that's going to be particularly challenging for Argentina in terms of regional competition. But probably what this will do is that you'll have, much like you've had in the past 30 years in Argentina, another big policy swing towards policies that are extremely favorable to private and foreign investors. And maybe that will generate growth, but then after a few years, it's going to start to generate the discontent that it always does, and then maybe you'll start to see another swing. So just to conclude, I think, yes, I think that, the first thing is, I think, Argentina is clearly a story of, I think, a failed policy, mostly because of the instability of the rules of the game and the opacity and the arbitrariness of government policies. Yes, it's a possibility that it will have to improve because otherwise the economy will not stable. But I think the real doubt in Argentina is whether this will lead to a stable framework that could create, I think, the roots for a sustainable development, or it will just be another event in a long history of booms and busts in Argentine history. And my sense is, given how things are playing, we're probably going to see something like that. And with that, I'll conclude and pass it to the next one. Thank you.
Thank you. Thank you, Daniel. Thank you, Daniel. Sir, Argentina is certainly nothing if not pendular. So now moving from Acesa up to Maiquetía. Let's go. Hold on then.
Thank you.
Hopefully we won't get robbed.
Thank you very much for the invitation. It's a pleasure to be here. Basically, what I wanted to tell you is a little bit about the story of foreign investment in the Venezuelan oil industry, but framed into the bigger story of Latin America and these cycles of investment and expropriation that Daniel was referring to. The oil sector has peculiar characteristics that make it a bit different from other sectors in terms of the relationship between government and private companies. First of all, as you know, in the oil sector, there are these very significant rents, these extraordinary profits that make, a business in which in most of the region you have a cost per barrel of less than $20, and as you know, the price of oil has been around $100. There are very few other businesses businesses like that. But these rents are extremely volatile because the price of oil varies a lot, and also the profitability of different fields is extremely different one from the other. So states have a sort of a tough time sort of understanding how to extract those rents to get sort of the extra profits, the extraordinary profits from the sector without hurting it, depending on different conditions and different types of fields. The other characteristic that is very important is the size of sunk costs. I mean, these are typically investment that you have to make a very significant initial investment in the type of investment that cannot be redeployed in other projects. So once you are, the day before you invest your money, you know, you have a lot of options. The day after you put it in, you are in the hands of the government. And you know, that creates a lot of incentives, as we have seen in the history of the sector, for a forced renegotiation of contracts, for expropriation and the like. And this is an industry in which, when you take policy decisions, their effects might last for decades. So politicians take decisions that might not affect in the short run, so they don't care that much about. I mean, they care about the benefits that they generate, but not the cost that they will generate in the distant future. And so the timing of what happens in this sector versus the timing of politics in a region in which, you know, politics is very short-term oriented, it's a problem. By the way, I think one very interesting difference between the shale production and the regular oil production is that sunk costs are less relevant in shale. You know, you have to drill and drill and drill all the time. So if I was an investor like Chevron, I will be less worried about what will happen in my investment in a project in shale in Argentina, because, I mean, if the government changed the rules of the game, you simply stop investment and the production will collapse, and the government will very quickly understand that there are costs of doing things the way they are doing it. Whereas if you have a huge project, you know, a deep offshore project in which you have an initial investment of billions of dollars and then a relatively low operating cost, the reality will be very different. Similarly, with the issue of risk, in the phase of exploration versus the other phases, once the risk goes down, once discoveries are made, I mean, the government simply does not understand why they in the first place gave conditions that look necessary to make it attractive, but now once a big discovery is made, they are simply not happy with them. So, I mean, these sort of type of political economy issues are what explains the apparent paradox that Latin America, you know, in the middle of the largest and longest oil boom in history, has not seen oil production increase. All the other regions in the world during the boom have increased production, with the exception of Latin America, where production has been pretty stagnant. However, this sort of general statement about the region hides the dramatic difference between countries in which production has been declining significantly, like Mexico, Venezuela, and Argentina, and countries in which at least until recently, in the case of Brazil, production has been going up quite significantly, in particular Brazil and Colombia. And countries like Ecuador and Bolivia, in which basically, I mean, there has been some stagnation. And basically what I want to argue is that this has to do with the issues that I raised before of the resource nationalism and the political economy. So here we can see the three big countries in the region and see the very different trajectories that they have had in the last decade and a half. And this is the other countries in the region. This is a different axis, so these are much more smaller producers. But as you can see, by Argentina collapsing in production and Colombia, on the other hand, reacting to the significant decline in production that they have, the red line, and changing their policies to make it attractive for investors to get back in. I mean, there are huge differences between these countries, because, you know, there are countries like Venezuela, which has the largest reserves in the hemisphere. I mean, and we can talk a lot about details about these are very extra heavy reserves. They might be overstated, but in any case, it's a country that not only has the largest potential oil wealth in the region and among the largest in the world, but also that depends totally on oil revenues. I mean, 96 to 97% of exports in Venezuela come from oil. But as you can see here, the countries in which reserves were significantly increased by the wave of investments that happened in the 90s were typically the countries that later on moved to nationalize. And this is the non-conventional resources that I don't have time to talk, but there is a lot of potential in Argentina, in shale, and in other areas. So basically my argument is that the characteristics of the oil industry that I mentioned before, during a cycle of very significant prices, as I said, where the price of oil dramatically increased in 2003 till the last few years, after the end of an investment cycle in many of these countries that were pretty successful at opening the oil and gas sectors like Venezuela, Argentina, Bolivia, and Ecuador during the 90s, in the context, by the way, in many of these countries of very regressive taxation systems, meaning that these taxation systems, the participation of the state didn't go up when the price went up in the same way. So it made the governments really attractive for the governments to change the rule of the games and either expropriate or nationalize. But in particular, these conditions that were true for all the region did not affect the same way two different sets of countries. Countries like Colombia, where production was collapsing, and they needed to change the rules to attract investment. Countries like Brazil, where they were significant importers of oil, and until they discovered the pre-salt, had a lot of difficulty, being able to meet their needs. These countries reacted differently than the other that moved to very significant resource nationalism. So Argentina, Bolivia, Ecuador, and Venezuela were the leading resource nationalists. And if you look at what happened in the rest of the world, there were other regions in the world in which similar phenomena happened, like, for example, in Russia and some other countries in Central Asia and in Africa. However, Latin America has been one of the more extreme sort of cases. As Daniel mentioned, Argentina and Venezuela have sort of records in terms of, and Bolivia. I mean, Argentina has nationalized the oil sector like 4 times, if you count, depending on how you count the cancellation of contracts. Venezuela 3 times, and Bolivia also like 4 times, right? And so this is a particularly volatile region in terms of these kinds of cycles. And in the case of Mexico, it's a very different case that I don't have too much time to mention, but as we know, the reason why they are opening their oil sector is because the decline in production has brought them to the realization that they need to move in that direction. But the cost, the very significant cost, and that's the sort of the main message that I want to send here, is that, these countries increased their revenues from oil by increasing taxation, by nationalizing some of these projects, but the opportunity cost in terms of the lack of investments that did not happen because of the way they did this are significant. And here, this is the Fraser Institute sort of index of attractiveness of investment in the oil sector. And as you can see, some of our friends, countries here are at the bottom, actually are the last few countries. Argentina, by the way, doesn't appear there because there are very different jurisdictions. So you will see Neuquén and each of the states, but they are relatively better than these other guys. And I think the case of Argentina, I would be a little bit more bullish about it. So the other, very briefly, I will mention about in general the issue of foreign direct investment. Venezuela received the largest windfall that any country in the region. As you know, most countries in the region did very well during the last decade because all of them benefited, with the exception of some in Central America, from the increase in commodity prices. But Venezuela did dramatically better in terms of receiving a larger windfall. Nevertheless, Venezuela had the lowest foreign direct investment per capita and in terms of GDP of the region. And I have a few slides showing that. I mean, even in absolute terms, the performance it's pretty bad. But if you look at it in sort of in per capita terms, Venezuela received an average of $82 per person per year in foreign investment, which is much smaller than the average, and in the case of Chile is 10 times more than that. So why are we seeing now, because Daniel said that in Venezuela it's not clear that they are opening, but Venezuela is opening to the oil sector, right? I mean, it's not necessarily successful, but it's clearly moving in that direction. And the reasons are basically because of the pragmatisms that it's forced to you when you have these conditions that you see there. A government with a fiscal situation that is critical, an NOC, national oil company, that is in very bad shape, production is significantly declining, there need to be large and risky investments need to be made, and the government doesn't want to take those significant risks, and sometimes there are issues of technology also. The only sort of factor that doesn't sort of go in the direction of the Venezuelan government being totally open to investment is the fact that still the price of oil is relatively high, and so they have some room of maneuver. Although, by the way, the price, I was calculating the other day, the price that would be required to balance the Venezuelan budget with the expenditures that we have today, the price of oil that is required, and the price of oil is close to $200. So that's the price that Venezuela needs to balance its books today. So that's why we are printing money like crazy. Moreover, I mean, the problem, and I just want to mention a couple of problems to illustrate, because I don't have time to go into why PDVSA is in such bad shape. But one of the reasons, this is a country that it's subsidizing oil to Cuba, to other countries in Latin America. It's basically giving away free gasoline in the domestic market. Venezuela, sells a barrel of oil that in the international market of gasoline, that international market goes over $100 for about 20 cents per barrel. I'm not talking about per gallon or per liter. It's in terms of a barrel, and the company's debt has exploded from $3 billion to more than $45 billion today. This is financial debt, but if you add to that the debt to suppliers, the debt to partners, and if you add to that, by the way, the Central Bank of Venezuela has given the equivalent of $40 billion in loans in bolivars. They have printed money to allow the company to finance its domestic bolivars, the needs of bolivars. So here you can see that the gray area is the production that is managed by PDVSA in their own operated fields, and the other two are the other types of contracts in which there are joint ventures, either in extra heavy oil in the case of the green, and the conventional oil in the case of red. And as you can see, today, because of the significant investment that happened in the 90s and in the early 2000s, about 1 million barrels of production of Venezuela more than a third come from joint ventures in which there are foreign partners. Those, as you know, were either expropriated or contracts were forcibly renegotiated. But still, the trajectory of production today is that production has slowly increased in the joint ventures, but keeps declining in the case of PDVSA. And so today we have that about 61% of production comes from PDVSA, and the rest from these foreign companies. If you see, foreign partners have invested. We don't have exact figures because PDVSA doesn't publishes or nobody publishes the figures of how much do foreign investors invest. But the foreign investors have invested, according to my estimate, between 1 and 1.3 billion per year since 2007. Mostly is it's the part of the cash flow. It's not that they have brought new fresh money after the expropriation. This is much less than during the period of opening, the total foreign investment in about 6 years was about close to $30 billion. In the oil sector. Today, we are having, so that's an investment of close to more than 4 billion per year, and this is not at constant, but at nominal prices. So today we have only a fraction of the foreign investment that we have, despite the fact that we have among the existing partners some of the most important companies, oil companies in the world, and there are projects signed to develop these spectacular potential reserves. So what we see today with President Maduro, and we saw that from the end of President Chavez's term, is a much more pragmatic policy. At least that's what they want. That's what I want it to be. So people say it's not pragmatism, it's desperation. But in any case, the conclusion is the same. They are, trying to open the oil sector. They have done a lot of things, and I will mention only some of them. They have reduced the windfall tax. They have said that it's not going to be charged for the new projects until they recover the investment. They have promised the companies much more operational control over the joint ventures. They have given, in order to finance the projects, they have created these mechanisms, and Chevron was the first company to sign one of those, by which the company, the partner, has control over the cash flow through a system with a trustee to be able to get back repayment of the loans. So all these things, and they have mentioned the fact that they are going to adjust the exchange rate, to devalue the exchange rate, so that when a foreign company brings dollars, they can exchange it for a larger number of bolivars. However, still, most of the investments are not happening. It's very small compared to what should be happening, and these are the reasons. Basically, PDVSA has a lot of problems. It has 60% of the equity, and it's not being able to put the money. There is a lot of macroeconomic instability and the issue of credibility that I already mentioned. Despite that, we have all these announcements. So when you read Venezuelan newspapers, it's really crazy, because every day PDVSA announces a new huge number of money that is going to be either invested or loaned by some foreign company to Venezuela, and you are like, wow, this is all the amounts of the announcements, and not. As you can imagine, not all of that money has been disbursed, but these are the announcements of what's going to happen, in which the 60%, in which the projects in which these companies are partnering that will receive loans from the headquarters, from the partners, from the foreign partners, and so some of this has happened, and there are some good news, like the development of the natural gas project between Repsol, Eni, and PDVSA, but still it's a fraction of what it's supposed to be. So to conclude, the Venezuelan government obtained a very significant investment in the same case as in Argentina. During conditions of low oil prices in a very difficult period, they got a lot of investment, about $30 billion, and the firms that invested were big victims of their own success, in the sense that once all the investment were sunk and the price of oil went up, the government renegotiated the contracts and nationalized some of the projects. And I'm not saying that some contract renegotiation was not appropriate, probably due to the fact that these contracts did not contemplate the significant increase in the price of oil that happened. There were some good reasons for government to try to renegotiate some of the fiscal conditions here. However, the cost, and this is sort of the final message that I want to make, the cost in terms of the opportunity cost for the government, in terms of the lack of investment, the investment that did not happen because of how these contracts were negotiated, it's huge. Just to give you an idea, I have an estimate of about $25 billion of fiscal revenues that the government is not receiving today because of the investment that did not happen, that should have happened during the period between 2005 and today. And of course, as I said, the investment could have been, as I mentioned in a previous slide, investment today of the private sector could have been 4 times or even more the amount of they really are today. So basically, that's what I wanted to tell you. Thank you.
Thank you very much. Well, we've had a real privilege of having two of the leading experts on Argentina and Venezuela discuss the conditions in those two countries. Now, the dulce de leche of the night is we've been seeing the name Chevron up there quite a bit in the presentations, and clearly the person who knows the most and about Chevron's activities in Latin America is the person in charge of it all. And so we're privileged to have Mr. Moshiri with us tonight.
Well, first of all, good evening. How many people we have here from Argentina? Raise your hand. Go on. How many people we got from Venezuela? All right. Buenas noches. Huh? Well, let me put it this way. If you hear in the front line, people are going to completely disagree with me, is my family. I got my son, my wife, my daughter, and her boyfriend in here. They're Venezuelan, except the boyfriend. It's American, but we are trying to work on it to make him a Venezuelan. It's a great honor to be here with Daniel and Francisco. I think they set this stage in the way that it was very interesting for me. The way we look at the business is a little bit different. We take all the facts, we connect the dots, we take a risk, we evaluate it, we look at the history, we look at the future, and we decide what to do. Let me set the stage by, rather than jumping into the energy sector, talk about Latin America. I've been involved in Latin America for 25 years, and I've been with Chevron for 40 years. And I think Francisco referred to sunk costs. We call it the capital employed. We have close to $8 billion capital employed in Latin America, and we are in 6 different countries. And when you talk about Latin America, everybody thinks it's one country. Actually, the only thing they got in common is 2 things: the language and the music. If you go to Latin America, you can hear Mexican music in Caracas or Venezuelan music in Mexico City. Those are the commonality they got. But other than that, each of them operate differently. They got a different political system. They got a different social and economic conditions. Latin America economic condition actually doesn't start with the politician. Latin America economic condition starts with people. Latin America has a large portion of it is people that they are below middle class. Some of them are way below middle class. And you got to take a look at it. When the government reacts, the condition is related to the majority. You take from Mexico all the way to Argentina, some of the issues that we talk about, even about the immigration issue we got in this country, you got to look back and say why those conditions created. From the business point of view, it's very critical for us to understand the social economic of this country. Then we will be able to plan how much we want to invest and how much we want to expose our shareholder to the condition of the country. Good thing about Latin America is it's a profitable place. No matter what business you go, you make money. If you are smart, if you are a bad business person, you're never going to make money anywhere. But if you are and you plan well, it's not a bad place. And you said, what does it mean making money? We look at the margin. That means margin on the asset that you got. How does it compare? You saw a lot of negative charts in here. There is a piano chart we talk about in our business. We look at the margin per barrels. That means terms and conditions that the government offer. Maybe it's not sustainable. Maybe it's not for 40 years. Maybe we go through ups and downs. But on average, Latin America is one of the highest. That means a barrel of oil margin in Latin America is somewhere around $18 to $20. Margin in Africa is somewhere about $7. When you're a company, you always look at that factor. Therefore, Latin America as a whole is not a bad place to invest, especially on the energy sector. Why? It's one of the continents that actually internal consumption is much less than production. Therefore, capacity of exporting is there on aggregate. Argentina, no, you cannot export because local demand is greater. But when you look at a place like Venezuela, it's the other way around. You look at Mexico, it's the other way around. You've got to put all that in perspective. When it comes to the energy sector, Venezuela, start with Venezuela. Venezuela has got the largest resource base. And Venezuela is the country that you have to spend almost nothing to find oil. That means when you start investing, like in the area like Faja, you can start developing. Other places like Gulf of Mexico, we spend billions of dollars to find oil. We drill many dry holes to find oil. In Venezuela, you don't. Therefore, that's the reason the margin is higher. Cost of development is much lower. Therefore, when you look at Venezuela, it's a country with a lot of natural resources. It has the capacity to even have a much higher production. A lot of people are looking for higher production. Why Venezuela is not producing 6 million barrels a day, 5 million barrels a day? It can, but it's really up to the government and responsible government to decide what that volume should be to balance what the country needs rather than continues to increase the production. There's got to be a purpose of it. Just think about it. Today, the price of oil dropped by $2. Today, the price of oil is not $110, it's $91. Why? Because there is more oil in the market than it was 3 months ago. Therefore, the price fluctuates. And you got to make sure that investment you make is also follow that fluctuation that you are going to predict. Venezuela went through the history of changes from nationalization in 1970s, opening in 1990, and they referred to President Chavez's action as expropriation. In eyes of Chevron, it wasn't expropriation. It was a choice. It was a choice, stay under this condition or leave. Our company decided to look at the condition, look at the long term, and stay. We have spent close to $700 million a year in Venezuela, the second largest producer after PDVSA. Now, you're going to say, what is the economic condition for oil? You've got to understand what does it take to be able to structure that, to be able to protect your capital, to protect your revenue, and be able to get your profit out. There is a misunderstanding in some of the political system that how that should work. We were the first one, we provided $2 billion financing to PDVSA. Actually, the list that you see, we were the first one. We worked on it for 2 years. And we developed a process that we will be able to benefit us as well as government of Venezuela and consequently the people of Venezuela. You always got to work on the solution. Just beating on the problems doesn't get us anywhere. In the business, you learn that very quickly. If I sit behind my desk looking at the problems I got to quit my job. There's absolutely no way. But you always got to look for those solutions. We stay out of politics. Politics does not belong to me or my company. Politics is belong to the people and the government. And the decision they make is the one that we got to work with. We are looking for the change in the political system to change investment environment. Politics is short-lived. Look at our own country in here. 8 years ago was different than now. The next election could be different. The business got to be able to work and identify the risk and mitigate the risk. The risk in Venezuela today is not the investment. The problem in Venezuela is the efficiency and effectiveness of getting things done. What does it mean? If I don't mind to go ahead and spend another $20 billion, develop another Faja project, absolutely no problem for us to do that. Do we take a risk from investment point of view? Absolutely we do it. The question is, how are you going to implement your project? Do you have a human resources capacity and capability to do that? You can't bring 7,000 workers in Venezuela to build a plant and just operate it and take a profit out. It ain't going to look good, ain't going to sustain, it's not going to be perceived by anyone as the right thing to do. Therefore, Venezuela's today's problem is that. Human resources capacity, skill, productivity that get it going. PDVSA, our partner for many years, actually after nationalization in 1970, we continue to have a relationship with them, has been how can we work together to expand human resources capacity, how we can be able to do it. PDVSA is a very capable organization to drill wells. Be quite honest with you, the problem in energy sector in Latin America is not below the ground. Technology, resources is there. The problem we got in Latin America, everything is above the ground. And it's not all related to the political side. It used to be. Now we are talking about supply chain. If you want to building something, where are you going to get the welders? Where are you going to get the material? Where are you going to get the road? How are you going to do that? You're going to depend on the other companies to help you out to do that. We call it a service company or business partners. Where are they? Is the country has that capacity to do that? Can they participate? If they don't, the cost goes through the roof. The project becomes marginal. Therefore, there is a lot of challenges in Venezuela to get to the next phase. And I think those are the things need to be resolved before large investment coming back. In the meantime, it's a step by step. There are opportunities there that the companies can be there, be able to extract oil, be able to make profit, but you've got to work within the system that it is in place. That's how the business runs. We are not trying to fix the system. We try to understand it and work with the system to make sure we get our objective that is there. When you look at Venezuela as a whole, Venezuela is a rich country from all resources. Heavy oil, gas. Repsol YPF discovered 11 TCF of gas just 3-4 years ago. They had a gas deficit, now they got a supply of gas. Therefore, Mother Nature already gave that. How you can convert that money, not necessarily to money, but to productivity. How you can create jobs, how you can make people productive, how you can create human resources capacity. Now, I think, that's my personal opinion, by the way, if others don't quote me as a Chevron, I just tell you as a person lived and my family of Venezuela and tell you that human resources capacity has been subsidized, heavily subsidized, creating entitlement. Creating entitlement because previous Venezuela was heavily lean on the other side. The President Chavez era tried to create a balance, trying to pull from the other side to this side by helping the 80%. Whether or not the pendulum swing on the other side now, that needs to come back again to the point that create the productivity and human resources capacity. If that human resources capacity is there, absolutely, we're going to invest much more than we are doing today. It's a great place, it's a great opportunity, and those are the comments I would make, not to you, also to my board, to my executive committee, when I ask for money every year to spend in Venezuela. Excuse me. They ask me, can you manage it? I said, yes, I can manage. You got to understand this. Complex world that we got today, trying to fix it and trying to articulate what is the right way to do, you're doomed to fail. You got to understand it as a business. You got to be able to clearly identify the risk and identify how you're going to mitigate it. If the risk is too high, you got to find another way of mitigating that. That could be lowering your investment. That could be increasing your investment. Today, investment risk in Venezuela is relatively low. If people are worried about expropriation or nationalization, is relatively low compared to other countries that we operate. However, implementing that investment is a risk. And as pointed out, I think by Francisco, some of these projects require billions of dollars for investment. And if that condition changes, I think investment would return to Venezuela. Expectation is that, oh, well, you invest money in there, how about another expropriation comes about? That's something we include as part of the decision making, as part of the economic evaluation. The risky countries, you expect higher rate of return. The low risk, you expect lower rate of return. You include all that in there. But when you look at it in the global setting and compare it to other places, you will find that the risk relatively manageable. Again, you're never going to eliminate the risk. You always got to be able to manage it. Therefore, Venezuela is completely different than when you move down to Argentina. Argentina geological setting is completely different than Venezuela. Argentina got 3 basins: San Jorge Basin, Neuquén Basin, and Mendoza Basin. These are a petroleum basin. If you look at the 1990s, early 2000s, actually Argentina was exporting oil and gas. As consumption continued to grow, which industrial country would expect to happen, and production decline, they start having deficit. The price at the pump, government decided to fix it. Why they fixed that price of the pump? Because they knew they have some social problems. They couldn't let the price of the pump, gas at the pump, to continue to grow. They were in the economic crisis and so forth. That was around 2002, 2003. I was there. When the government called upon us, say, you shall sell oil in Argentina at this price. We all went crazy. How can it happen? How can it be? That was at $28. We were selling at $28. Today, we are selling domestic oil in Argentina at $78 to $85. The price has continued to grow. It kind of adjusts itself on the economic conditions. And we are in Argentina. We actually have 2 companies in Argentina. We got one company that handles conventional oil. The other one is partnered with YPF. I want to comment on YPF. Among all the companies that we have been partnered with, YPF is one of the best companies to work with. Argentina has a tremendous human resources capacity and capability. High level of education, high level of human resources, good infrastructure, everything is in place. The only problem is they have a deficit of energy. In 2013, Argentinian government brought 40 cargoes of LNG in the magnitude of $10 billion, subsidized. You had a choice. Let the price of the gasoline or natural gas goes up, or subsidize it. These are the decisions government make. It's the same thing in Venezuela. Actually, price of gasoline is almost free. It's less than a penny per gallon. But if you take all 25 million Venezuelans, they all benefit from it. And there were 2 things in Venezuela. They said if you change it, there would be almost a coup d'etat. One was the price of gasoline goes up. The other one is stop making beer. Those are the 2 things that everybody collectively agreed on that it got to be there. If Venezuela want to move in a different direction, allowing the raise price of gasoline goes up, is that acceptable? How that the community would react to that? How would that be? In Argentina, was almost the same. The price at the pump was at that point. Therefore, how would we be able to subsidize it? YPF decided, the government of Argentina decided to expropriate or push Repsol YPF out. The justification, I'm not here to make a justification for it, was reinvestment ratio. The expectation was that not enough money was going through exploration or development of new hydrocarbon, and that is absolutely right. Not necessarily Repsol, but aggregate as the energy sector. Exploration money was going down, new oil wasn't discovered, therefore production was going down. The government didn't have any resources to articulate and energize that activity to come up. That's the decision they made. And by the way, YPF is not a national oil company. YPF is the publicly traded company. If you go to NASDAQ, or if you go to Dow and have a ticker in there, and you can see it's traded. Yes, government got large share of the YPF. YPF runs very well. We spend about $1 billion a year in Argentina, and we started spending that money on $1 billion on unconventional, and we are working closely with YPF. For a major oil company like Chevron to allow another company to be operator is very seldom. but we allow YPF to be the operator. We're just a partner. And so far, the results has been successful. The efficiency is there. And if you look at the earnings and production increase that YPF has created in last 12 months, you will be surprised. We are surprised. I tell you, if I go to my board and tell them we are spending $1 billion in Argentina and we are not making money, it ain't gonna last very long. That discussion would be very short. Therefore, to give you a sense, YPF as an organization today is much more effective than ever been. It's very dynamic, they are focused. Their focus is in creating more energy and discovering more resources and maturing the resources in Argentina. And the leadership of YPF, the person that is in charge, came from our industry. Actually, he's a very well-known individual, very capable, and he knows how to run the organization. Therefore, those are the things we pull together. Argentina is not going to be an exporter of energy. Argentina, the best it can do to be right at the demand level. Now you're going to say, well, how that can happen? Has it happened anyplace else? Argentina is one cycle behind where we were in the United States of America on energy. 2000, I was going around trying to find receiving LNG terminal here in the United States. We were looking at the military base, we were looking at the buying resource and places that we can put the receiving terminal and so forth. Today, price of natural gas is $4. We got wells that they are shutting. Well, how that happened? Unconventional. Today, the United States got 1 million barrels additional production that just come from unconventional. It turned around. WTI is low because there's a supply of the extra supply of oil. Argentina is right behind it. It takes time. People got to be patient. We were looking at the energy policy in the United States. Everybody was talking about, we got to have an energy policy, we got to have energy policy. Today we are all rushing to Washington telling, we want a permit for export. When was last time you heard that we want to export oil from the United States to other countries? That's how the market works. Argentina exactly in that point. Argentina, if Vaca Muerta production get to the level we are expecting, they're going to be right behind what we're seeing here in the United States. I see Latin America energy sector is bright. It's not a place for everyone. It got to be a place for the people that they understand the political system, economic system, and the fluctuation that they're going to go through it. The crisis in Venezuela is going to repeat itself. Maybe not 10 years from now, 20 years from now, but it's going to repeat it. You got to be prepared for that. Argentina is a huge industrial base country. Argentina doesn't depend on the revenue that generates from energy. It needs the energy to run the industry. That's the reason the government, the way they react, it has to be respond towards the industry. They have done a reasonable job to make sure that is happening. Actually, I think the policy that has been put in place today allow that Argentina doesn't go deeper into the energy crisis that could have been if that policy wasn't in place. YPF focus on developing unconventional, that has to be a focus of the government. It has happened, it's happening right now. Now you're going to say, why you are telling me the glass is half full? I'm not here to tell you the glass is half full. I'm telling you as a business person, we make those judgments, we make those decisions, and the way we see things, these are the things that you got to manage. You can't complain about it. You cannot talk about the political system and see who's going to be the next president, whether or not things are going to change. You got to assume that you'll be able to run your business under any condition, and the condition that you see in the past and the one that you see in coming up in the future. From resource point of view, I want to clearly point out that Mexico is going through a different path. They're recognizing not decline in the production for different factors. They're recognizing they need to develop the resources. They're looking at the U.S. Gulf of Mexico. In U.S. Gulf of Mexico today, we're drilling at 10,000 feet of water. Do you know how many wells Mexico has in deep water? Three, they see the opportunity. They see the opportunity for investment, they see opportunity for employment, they see opportunity for increasing the industrial capacity. They see all that, and that's the good decision they made. It was a just right time to make that decision. Again, I want to leave you with that. As a company, we are glad to be in both countries, Venezuela and Argentina. And as every company does, they got to manage their business the best they can. Our formula to stay in Venezuela was we never leave a country because conditions change for the short term or the little bit longer period of time. In Argentina, we believe in Argentina. Again, fundamentally, it's because it's a rich country. Foundation is based on the industry that is not oil driven, is non-oil driven. Those are my comments. I didn't have any view graph to show you because it would be repeat of what my colleagues has presented to you. But overall, I think it's the right place for us to invest in the energy sector. And I think overall, you're going to see some good development coming up in Argentina in unconventional. A lot of people are pushing back. How do I get my money out? How do I deal with Argentina political system? But I think eventually we get to the level that everybody would be comfortable enough to continue and join us in Vaca Muerta. Those are my comments. Thank you very much for your time.
I'd like to thank all three of you for some excellent presentations, and we have a little time remaining, so I'd like to open the floor to a couple of questions.
I have a question for Mr. Moshiri. I was wondering, with the opening of Mexico, very interesting opportunity, but what if Venezuela was to open up again? I mean, how do you think that those opportunities would compete for capital? Because that would be an interesting dynamic.
How do they compete? Well, first of all, as a company, we just don't put our capital in one country or one basket. But in comparison, you got to look at it from resource point of view. As I pointed out, cost of development, what we call it the cost of finding and development, in Venezuela is very small. Cost of finding and development in Mexico is huge. Therefore, you got to put that one in your economics. And you got to look at also complexity of development. Development in Venezuela are relatively simple. It doesn't require high-end technology. It's very much traditional technology can be applied. In Venezuela, it's capital efficiency that is matter. That's what I was trying to get at. How fast can I build an upgrader and develop Faja and increase the production? Can I have a project in Venezuela can produce 400,000 barrels a day? The answer is yes. Can I develop a project in Mexico, one project, to produce 400,000 barrels a day? Low probability. That's how we manage it. And I still believe there is no second country on resource base to Venezuela, not just in Latin America. Actually, putting Saudi Arabia to the side, which is different, I think Venezuela is in a very unique position.
Thank you. Yes?
Ms. Moshiri, from the time in 2007 when the changes took place in Venezuela, how has Chevron had to adapt to the conditions in terms of either how you staff, more expatriates, or anything else that you have had to adapt? You spoke very well of the ability to adapt to the changes. How have you been able to adapt, or what specific steps have you taken to adapt to those changes?
Well, we work very closely with PDVSA. I mean, if you look at the isolation, it's saying, oh, PDVSA is not doing so and so. We don't see that. Actually, ratio of expat to national employees on our project is 95% national and 5% expat. But we utilize a lot of Venezuelans. Actually, a lot of Venezuelans right now working in our other operation we have outside Venezuela. And it's not a matter of, okay, condition in Venezuela is tough, everybody want to leave. No, we have Venezuelans that working in our operation. Again, I want to point out, operation in Venezuela is relatively simple. I mean, it's not a very complicated operation. You're not operating 10,000 feet of water. You're not operating massive infrastructure offshore. You're dealing, if you go to El Tigre or you go to area that the activities going on are relatively simple. Therefore, the capacity is there for what we have today. But if I want to add additional 200,000 barrels a day, which is there, and you say now, how can you jump from where you are to 200,000 barrels? That human resources capacity is not there. It's not the funding. You need 7,000 additional people that got to add to your workforce. And that capacity is not there. We got to build that capacity. That got to be the number one priority for government of Venezuela. Build human resources capacity and capability. And if you cannot build that human resources capability and capacity, it would be very difficult to get there.
Question up there?
Me?
Yes.
This is for anyone who would like to answer. With all the economic problems that Argentina is going through right now, do you expect any kind of renewed effort to obtain the resources, especially oil in Las Malvinas? And if so, what does that mean for relationship with Great Britain or even the United States?
I'll respond, but I don't think that's really a big issue. I mean, my sense is that that here the government's focus or YPF's focus is really on unconventionals, and I think that's really where it is, right? I mean, I think, and even if Argentina were to start focusing on offshore, it has enough potentials by itself without that. So I don't think it's really an issue that's even in the radar of the government or anybody else in Argentina.
I just wanted to mention one thing about the difference between offshore and unconventional, as the one that I mentioned before, that, in a country with Argentina is not in the category of Venezuela of so low credibility, but it's close. I mean, it's not that far. And even though, as Mr. Moshiri said, I mean, they have appointed a very respected head of YPF and are doing a lot of things in order to attract investment, this is a country with one of the really bad reputation in terms of rule of law, etc. So it would be much harder to develop something very, very risky with high sunk cost like offshore compared to unconventionals, despite the fact that unconventionals are sometimes marginal in terms of the economics. So it's very different type of projects for this type of environment.
Well, every time that you come to a university, you're supposed to learn something new, right? And I thank Mr. Moshiri as a Venezuelan because he gave us a side of Venezuela, a very low-risk investment country, which is a good news for us Venezuelans because when you read from Barclays, Moody's, etc., all the bank, JP Morgan analysis, Venezuela is a high-risk country for investment, but that's good news. Thank you.
Yes.
I am interested in the political stability of the Chavista regime in Venezuela. We hear a lot the last election was closer than many people thought, and even though the power is with the state, I'm just curious if we can see any changes politically and the long-term power of the Chavista-style government.
Well, that's not an easy answer, but as you point out, I mean, it was a very significant difference between the way that Chavez won elections in the past and the margin. I mean, Maduro basically, I mean, we don't know if he won. I mean, it's a tie. It was a tie under the type of electoral system that we have. We don't know exactly what happened, but I mean, the reason why President Chavez was so popular, despite all the different things that you hear about it in the press, it's basically because this president spent more money than anyone in the history of the country. And not only did he spend the largest windfall, in the history of the country, but he also got into debt dramatically. As I said, he was spending, in the year with the highest price of oil in history, he had a deficit of 20% of GDP. I mean, countries that are broke Greece did not get there. So this is one of the most irresponsible, fiscal policy in the history of humanity, and I'm not exaggerating. So now the problem is that they are not able to do what they did in terms of the consumption boom that happened. The situation is very difficult. The government is not willing to do the adjustment that it has to do in terms of gasoline prices, in terms of the exchange rate, etc. And so the popularity of the president is collapsing, still pretty high, if you ask me, in terms of how the economy is going. 85% of Venezuelans say the economy is going in very bad direction, but still 35% support, between 30 and 35 support the government, according to most polls. So the situation is very difficult, but it's not clear how it will be solved politically. I mean, we have elections next year for the National Assembly. We don't know exactly what would happen in case the elections are shown to be that the opposition has such a big lead before the elections that the government can be worried about losing the National Assembly, because that could create a very significant political upheaval in the country. But in any case, it is a very tough political situation with no easy exits, an extremely polarized country, and an economy that, unless there is a very significant increase in the price of oil, is going to be in really bad shape, even if they do what they need to do. More even if they don't do it, as has happened in the last few months.
Yes.
Historically, a lot of the power has resided in labor unions throughout the continent. We see higher labor costs in Argentina because of the unions. We see strikes in Brazil. We used to see strikes in PDVSA for actually Chavez fired most of them. But in terms of the private industry, what is the relationship between the companies and the unions? And how much is it mitigated by the government?
Francisco, you want to talk about Venezuela and Daniela, Argentina?
About labor unions and
Or the private sector?
I don't know if you want to.
No one wants to touch that.
Well, no. Good question, by the way. Like I mentioned, you got to have a relationship with the government. You also got to have a relationship with unions. Argentina is heavily union-driven, and you got to manage that. I mean, this is something is not new for us. We got a lot of places that we got to deal with union. Venezuela, on the other hand, is less union-driven. Venezuela is less union-driven, but there is more entitlement-driven. You know the difference between the two? Okay. Entitlement is what you're going to give, what the government is going to give me, rather than unions saying, I want more pay, I want to demand this and that. It's two different problems. That it's not a problem, it's something that we've got to work with. And I think managing that is also part of what I call it the above the ground risk. If you've got a big operation going on, you got to strike for a week. Our business, you cannot just shut it down like a factory, car factory, and go back in there and open it up. For example, during the strike in 2003, 2004 in Venezuela, those oil fields were shut in. Actually, we didn't shut our field in. The reason for that was if I would have shut that field in, actually it was Petroboscan, I couldn't bring the field back on for another 5 years because it's a heavy oil. You can't just turn it on and off. Therefore, you got to manage that, what we call the risk above the ground. You got to prevent those. You got to make sure you collaborate, you understand, you work. And you're absolutely right. Partially, the inflation that my colleague mentioned, inflation in Venezuela, they are estimating, again, we take the numbers, we put it in our own program, and we find out what really inflation look like. It's somewhere around 60%. That inflation translates into the labor costs. And we got to be able to manage that. We got to respond to that. And we really work with union, with the community and so forth, trying to see how we can get around answering those demands without impacting the operation and shutting the revenue, which impact us as well as the government, as well as people, because if revenue doesn't go to the government, that's impact on the people. Therefore, it's part of the above the ground risk and management. the management of your business is critical. It's not just a political risk, it's not economic risk, it's the other element, and you mentioned one of them, which is a very valid one.
We'll take one last question.
So Venezuela is one of the most violent countries in the region, as well as the world. And I was sort of wondering how Chevron might mitigate the risk to the human capital that they bring down, considering that you mentioned there's not a ton of local human capital, or at least from what I gathered from your presentation, that you guys tap into. Obviously, a lot of these resources aren't in Caracas city, where a lot of the violence occurs. But if you could discuss that at all, and if Dr. Minaldi, if you could discuss maybe the violence issues and its impact on the energy sector, I'd be curious to hear. Because Mexico, for example, is sort of facing those issues looking forward.
Well, security in Venezuela is a big issue, no matter just for Chevron, for everybody. I mean, that's a known fact. And as I pointed out before, it limits a lot of movement by our people. There are restrict quota where they go, what they do, and we don't differentiate really between our expat or national employees. Those processes, those systems are in place, and it goes back to what I say, why those incremental production is not coming. Because managing, for example, we got close to 800 expat in Venezuela. But if I bring another 2,500 expat, my managing that larger group is going to be much more difficult. And you don't want any incident happen. Therefore, the security issue is prevent Venezuela to move to the next level. You know, when I sit down with the government of Venezuela, they said, can you build a 400,000 barrels a day project? I sure can. Do we have resources? Yes, you do. But the next step is, how those other elements that I need to make that happen, do I have that? And that's where the above the ground problems comes about. And for us, the personnel security is really important. We anchor on that heavily in the company. We don't want to put anybody at risk. And today, security in Venezuela is not where you can bring that large number of employees, whether or not national or expat, and put him in the remote location to build a $20 billion upgrader. And that's the concern.
Go ahead.
Just briefly, I mean, the situation, as you know, has turned much worse, and it has some similarities to Mexico because a lot of it, according to the evidence, is related to the narco trafficking and micro narco trafficking, and then these criminal groups entering into other lines of business, unfortunately, like kidnapping and the like. So it's a very difficult situation, not only in Caracas. Caracas is the second most violent city in the world, but also in some remote regions, including some regions in which oil and natural gas has to be exploited. So it's a very, very tough situation. On the other hand, the lack of human resources in Venezuela has a lot to do with, you know, the fact that 20,000 employees were fired from Petróleos de Venezuela after the oil strike. And, you know, Venezuela had very good human resources in the oil industry compared to other countries in the region. But those resources are now in Canada, in Houston, as some people here, in Mexico. I just recently went to Saudi Arabia and Kuwait, and I met a lot of fellow Venezuelans. So.
Well, I really thank you all. Unless our panelists have any final comments, I'd like to really thank the audience for taking time to come out and be with us tonight. And I'd be remiss if I didn't have a short plug for our new Masters in Global Affairs program, which is a master's degree that's a joint venture between the Baker Institute and the School of Social Sciences that we'll be launching next year. Some brochures were outside, but if you have any questions, please feel free to get in touch with me or Abby Godley, the Associate Director. So thank you all and have a good evening. Thank you, our panelists.
Thank you.